Hi, it's Jacob here from Ripehouse. Today I'm going to be talking about a concept that we get approached and discuss regularly with clients who, recently last week we had a client that had a $2 million pre-approval. Okay, they had equity in their property. They had $2 million that they were able to go and spend on buying investment properties. They were about to go shopping. Okay, and we were dissecting with them, do we go away and buy one more expensive investment property, or do we buy 2 or 3 cheaper investment properties? And when I want to unpack this with you now, I want to burst this myth, okay? Cheaper does not necessarily mean an inferior investment. Well, that's the myth I want to bust. So going back another level underneath that, the city of Albury-Wodonga, about 90,000 people on the border of Victoria and New South Wales. Over the last 25 years, this is annual capital growth compounding over the last 25 years, it has had higher capital growth than Sydney. Okay, this is a diverse regional centre, a buoyant economy. Every year, new things are emerging, new employments, new trends in terms of tourism or agriculture or manufacturing are bringing new people and population growth into this city. And this is delivered year in and year out over this 25-year period. It's punching above its weight. It's not the normal. Granted, the vast majority of regional centres across Australia don't perform in line with our capital cities, but there are exceptions to the rule. We've got to go and find those because cheaper does not always mean an inferior investment. Going back to that, the way that I like to approach this concept, $1 million investment property or 2 or 3 cheaper investments, is to look at what opportunities are available to us today. And as we sit here today, the opportunities are not necessarily in Sydney and Melbourne. Sydney's going through a consolidation period moving into COVID anyway. Okay, COVID's put a handbrake on it. Sydney's not looking too bad, but it's not a buy, it's a hold recommendation as of today. Melbourne's another story. Okay, you've come out of a long lockdown period. We're not sure how things are going to emerge for Melbourne. It wasn't looking good in the lockdown period. Melbourne is a watch and wait, not even a hold at the moment, it's a watch and wait. Okay, we can't even go out onto that ledge and say, with confidence about Melbourne. So those 2 cities at $1 million or $800,000 price points for good investment grade properties are just not offering us opportunity at the moment. We can then go a tier underneath that in terms of price, Brisbane, ACT, Adelaide, even into WA, and these are areas that are actually presenting us options, all right? This is where the opportunity is starting to lie for us. So we are seeing opportunity now, as of today, at that $500,000 price point. It is acceptable. That is the opportunities that have been fed to us as investors, and that's where I would consider passing our attention. But then there's some really compelling opportunities right as of today in the regional centres, around that $300,000 to $400,000 price point. We're not talking these highly volatile mining markets, exposing ourselves to high risk and high reward. We're talking about buoyant and diverse regional centres with good, strong, growing populations at around that $300,000 to $400,000 price point. So, gun to my head, I have $1 million to spend on property. I'm not going to walk out and buy this investment grade property in Sydney or Melbourne, okay? I would consider a $500,000 investment, but my focus really is at the moment on that $300,000 to $400,000 price point, buying 3 investment properties. I hope that's helpful. If you've got any questions, please feel free to comment. Please share with your friends. We're here to unpack these types of concepts with you. Thank you.